Okay, hello everybody. Welcome to Korean Atlanta Mentorship with another clickbait video for you today. Today's clickbait thumbnail is called Debt Free Insanity. This is not clickbait. Oh, but it is clickbait, okay? Yes, that's what we do here at Korean Atlanta Mentorship. And another thing that we do in Korean Atlanta Mentorship? Pay off a mortgage in 2 years and 9 months. So if you're new to this channel, I'll let you stare at this screenshot of a mortgage paid off last year. Actually, it's already past, my goodness, it's August already, 2025, but this was in July 2024. I remember when I paid it off and I called the lady at the bank, right? Called the bank 1-800 number. And then I was like, "I'd like to pay off my mortgage tomorrow, please." And she was like, "Ooh, really?" Or maybe I imagined that, right? So, yeah, I paid off a mortgage in 2 years and 9 months and, talk about paying off debt because when you pay off a mortgage in 2 years and 9 months, your mind kinda works a little bit differently than the average person. You ever notice that the average person seems a little bit stressed these days? I don't know why. It just feels like everybody's just dumping on top of each other, stressing each other out, and then you go outside to the store, and it just seems like everybody's like super unfriendly these days, right? It's not just like a LA only thing; it's like everywhere. And I live in like small town, 2,000 person town city in Georgia with super fast high speed internet. It's funny. I have like two homes, right? So one of the homes is in a new subdivision, where they're building everything new in a 2,000 person small town, right? Where there was nothing there. And then they put fiber internet here. And I was like, ooh. And then I bought a 2 acre, what's classified as a rural property, even though it's like right next to a city, and that place has AT&T fiber internet. So modern society is everywhere, even in the country, folks. Although in my 2 acre property, we don't have sewer, we have septic. So about every 5 years, I got to call someone to vacuum up the number two. And it smelled funny the first time I had them uh, suction it up. Okay. All right. So, anyways, let's go ahead and get started. What is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. Okay. And so here's rule number one. And when it comes to velocity banking, is that you're going to create a budget. You're going to list all of your income, expenses, leftover savings, and then in your expense breakdown, you list every single debt that you have, right? So we have all these debts here, our personal expenses, and then what we're going to do is we're going to copy the budget into the velocity banking column and make the velocity banking version of it. And first thing we don't do, which is scary to a lot of people, is save money, right? So because we're going to use all of our income to attack debt. So if you take a look at my checking account, right? Checking account here, you see that money comes in. There's no money that stays in the checking account. And what's the difference between velocity banking and the average American style of banking is what is the purpose of your checking account? Is it to save money and have money left over in it? Or is it just as an intermediary? Is it like the middle step of your banking, what you call, I guess you would call your banking workflow, right? So money comes in and it doesn't stay there, it just goes into your debt, right? Whereas with average American banking or regular banking, it's you get paid, pay your bills, including your debts, and you leave the leftover in your checking or savings. So that's really the difference, right? So what's the purpose, or where is your checking account in your so-called banking workflow? Is it in the middle where money just comes in and as soon as it comes in, it goes out? Or is it at the end where, after you've paid your bills, is all the leftover money going to stay in your checking or savings, right? And so when we do velocity banking, we're not going to save money, okay? What we're going to do is increase something called our cash flow by moving some of our debts into a line of credit and then paying off of our all of our money into the line of credit. Okay. So, what's a line of credit? Well, all it is a financial tool where you could borrow money, pay it back, and then use it over and over again. So, this is my $373,500 home equity line of credit. And if you're watching this channel for the first time, and You've never seen how much lines of credit that I have. I have over $731,000, and this includes credit cards because credit cards are a line of credit, right? But before I learned this velocity banking stuff, I never knew what a line of credit, like I never heard the term. I think it was very intimidating to me. Like when I heard words like home equity, I was like, "What's that?" Sounds really scary. Sounds like the stock market, right? And I didn't know that basically it's like a giant credit card. Um, or actually, yeah, it's like your house as a disguised as a giant credit card. That's the way that I think of it. And so I have tons of lines of credit, including credit cards, which is a line of credit because you could use the money, pay it back, and then use it over and over again, right? And so if we sum it up, including these personal lines of credit, and this is the latest line of credit that I have, which is a $20,000 personal line of credit, latest line of credit that I have. So if you take a look, okay, you will see, okay, you will see that I have over $731,000 in lines of credit. Now, here's how crazy this is. Once you get to 731,000, you kind of think like, oh, that's good. You know, you'll think like, oh, it's enough, right? You're probably gonna think I need 2 million. You know, it's crazy. Like that's what I think nowadays. Like, oh, $731,000, not that much. But if you're objective about it, it's actually the top 0.1%. In fact, let me go ahead and ask ChatGPT this. If I have uh just over 731K in line of credit limits, what percentage of people does this put me in? And you'll see that we're using the new Chat GPT 5 that I got released today, I think. So let's go ahead and ask. All right. Well above the 99th percentile. So actually 0.1%. 0.1%. Oh my goodness. Right. So that's what happens when you get to 731,000. You think that's not enough. I need $2 million in lines of credit, but realistically, you're way above most people, right? So let's go ahead and read this.
It appears there isn't readily available data on the distribution of personal or business lines of credit, especially extremely high ones like $731,000. So I can't say precisely what percentile you're in. Here's what we do know. What the data tells us, average total credit limits in the US across all credit cards hover around $29,855 to $33,980 per person. Cite turn search 0 turn search 11 turn search 39. That suggests that a 731K limit is well above typical credit access. Federal Reserve Bank data shows that even at the top end, the 90th percentile of credit card limits is only about 19,500. So, where might $731,000 put you? If we assume the distribution of credit limits is roughly consistent with that of credit cards, having over $731,000 in line of credit limits likely places you well above the 99th percentile of consumers. In other words, you're in the extreme top tier. Caveats: the available figures reflect credit card limits, not necessarily broader lines of credit, such as business lines, HELOCs, or unsecured personal credit. Distribution data for those broader types of credit is sparse, so your exact standing is hard to nail down. It's also possible that business entities or high net worth individuals skew these numbers. In summary, the average American has credit limits under $35,000, and even at the 90th percentile, it's around $20,000. Your $731,000 limit is far beyond these levels, almost certainly placing you within the top 1% or even 0.1% of credit bearing individuals. If you're curious about whether this is consumer or business credit, or want help comparing yourself with specific demographics, age, income, geographic region, I'd be happy to help dig deeper.
All right. So top 0.1%. So let's remember that for later. All right. So let's go ahead and get started and go back to the velocity, talking about velocity banking. We don't have to engage in the bragging fest, although I love a little bragging fest here and there. and talking about how I paid off a mortgage in 2 years and 9 months. And you know what's funny? Like, I'm actually getting worse at teaching velocity banking because, when you pay off a mortgage in 2 years and 9 months, do you really have to care? Probably not. Right? Like, and I know some of you are out there getting angry at me because I'm not taking this seriously, but you know what? My response to that is you're probably right. Okay. Why? Because I paid off a mortgage in 2 years and 9 months, right? And that's the answer to every negative accusation about me, right? Why is it that a couple of days ago, I woke up at like 1:30 PM and overslept? It's because I paid off a mortgage in 2 years and 9 months, right? Why am I not responding to my text messages that a lot of people are sending me? Because I paid off a mortgage in 2 years and 9 months. It's this weird thing where I just, like, take every negative attribute about me, just my explanation is it's because I paid off a mortgage in 2 years and 9 months. I wanna say it's because I got high. It's because I got high. It's because I got high, but that's a song by Afroman, and I don't get high. So all right, so let's go ahead, and we're gonna make assumption that we have a $200,000 line of credit. Now, here's the secret to getting these lines of credit. Okay, I'm gonna show you the secret right here. It's right here, secret, right? Banks don't lend money to people who need it. So if you go to a bank and you need money, you know what they think? Ooh, very bad person. Very, very, very bad, right? They will think you're a very bad person if you need money and you go to a bank, right? So how do we get these lines of credit? It's easy. Don't need money, right? Like I make it seem so easy. Don't need money, but it's true. It's true. So if you go to a bank and you need money, they're not gonna like that, and they're gonna not offer you a line of credit because banks don't lend money to people who need it. So here's the thing: like if you're making this good income and you only have $200 something dollars left over, banks gonna see that and say, "Ooh, we can't lend this person money because this person needs money," right? So what's gonna happen is that um, they're going to see you as a giant risk and they're just not going to lend you money. But why do I show this situation? Is because if we had a line of credit, even if with the same income, then this would be essentially a lifesaver. And my whole point is don't even get here, right? That's the whole point. Don't even get here. All right, so let's go ahead and get started and move some debt into the line of credit. And so what we're going to do is take our two credit cards here, right? We use something called the cash flow index. The formula is balance of the debt divided by the monthly payment, right? And then what it does is it gives you a number and essentially gives you a ranking. Okay, so the lower the number, that's the ones you want to pay off first because you get more bang for your buck in terms of cash flow. So let's move these $65,000 of debt into the line of credit. And then, okay, this is what we're going to do. Guess what happens when we just move the debt? We didn't even pay it off. Okay. We just moved the debt. It's like a balance transfer. Oh my goodness. Same income. What? What? Clickbait here. Okay. So the savings, if we just kept savings, we'd have $247 of savings. But because we're not saving money, we have $2,434.87 of cash flow. What? I know. This is not real, folks. This is just pure clickbait. But it's clickbait that's quite amazing, right? I mean, here's the thing. If you showed this to your friends and family, I think their brains would short circuit because I've had these moments where I just show this and I know that people can't like dispute it. You know what I mean? Like they can't dispute this because the income is the same. But how did this $2,400, 2000 turn into like a multiple of 10, 2,400 of cash flow, right? So people stare at this and they're like, how'd you do that? And I don't know. All right. Last step. Final step is you put your entire $7,000 into the line of credit, take your expenses out, and then you rinse and repeat, and the balance will go down about 2,400 every month. All right. So let's go ahead and do that. And I'm going to do this. So G2 plus H2 minus whatever this is, 2434.87, 2434.87, right? 242. And then what we're going to do is we're going to take the average daily balance, multiply by the interest rate, 0.0 75, and then divide by 12, right? And then we'll do copy and paste. Copy and paste. All right, so now we're gonna go here, and then we see that in 30 months, whoa, it paid off. So simple. All right, so 30 months, we paid off 65K of debt, right? 65K of debt. And then what we have is these 3 loans, so that's the rest that we gotta pay off. And let me go ahead and reset this, right? So we have a loan calculator that tells us the current balance of all the loans. And you notice how this is 3%, but we're going to pay this one off first. Why? Because it has the lowest cash flow index, right? We don't want to move $190,000 loan, excuse me, into a line of credit, because by paying off this 190,000, we only get $954 of cash flow. But if we pay the 12 grand, we get about half of that, so you get more bang for your buck. So let's move the 12 grand into the line of credit, right? And I'm gonna just do this right here, and then right here, and then right here. So now it's gonna be plus 12967.95, and then I'm gonna just do this. This is gonna be 0, and then now our cash flow is about $2,884. So let's go ahead and do this, and then do this, and then this is gonna be 2884.08, and then yeah, okay, right, okay, and then now this is going to be 34 months. 34 months, so it's going to be 65 plus 25, and it's going to be 90K. And then, so now in 34 months, so it's going to be 34, 34, and then it'll be 0, and then it's going to be 78 grand. Okay, 78 grand, and then we're going to move it into the line of credit. All right, and then plus 78, 342.61. Move the student loan into line of credit, and then this is 0, and then let's go ahead and keep paying it off. All right, now it's 4 grand of cash flow. Okay. And so we're gonna just keep doing that over and over and over again. So 4045.17. And then let's go ahead and copy and paste. And I will go ahead and copy and paste. And then 55 months, right? 55 months it gets paid off. All right. Well, that was easy. You know, I know some of you are thinking, why am I so quick at this? It's because if you look at this YouTube channel, I have over 1,000 videos. And I don't know if you ever heard that Bruce Lee saying, which is I do not fear the man who does one kick, or I'm sorry, it was get this mixed up. I do not fear the man who does 10,000 kicks one time. I fear the man who does one kick 10,000 times, and I just do the same thing over and over again. And I could just do this like falling asleep. You know what I'm saying? Like I don't have to really think about what it is that I'm doing. Okay. And so I just kind of do this, and it's like, bam, look at all this debt paid off so quickly. Okay, 55 months. How much is 55 months? It's 55 divided by 12. That's about 4.58 years. Not bad, right? A lot of people struggle with student loans, credit card debt, and I'm like just kind of whizzing through it like it's easy. And the reason I can do that is because I paid off a mortgage in 2 years and 9 months. See how that works? That's the reason for everything, you know? Why am I such a jerk? Because I paid off a mortgage in 2 years and 9 months. Why am I so overweight? And I'm not saying I'm overweight, but if I were, and who knows, I probably am, it's probably because I paid off a mortgage in 2 years and 9 months, right? Why am I so smart? It's because I paid off a mortgage in 2 years. See, you could use it with positive and negative traits, okay? Positive and negative traits. Someone says something positive about you. Why are you so handsome? It's because I paid off a mortgage in 2 years and 9 months, I think. All right, so next one is the mortgage. So at 55 months, so this is gonna be right here, 55. Now, we don't want to move this whole 4% loan into a line of credit, because you might hear it in the internet, loan bad, line of credit good. But you can actually still use even a higher interest rate line of credit to pay it off. But the secret to this is doing it in small chunks. And the real secret to this is making sure that the 30-year mortgage is paid off last. Okay. Because if we look at the cash flow index, right, it is the lowest out of all of them, meaning it's not worth it to pay it off until the very end, but you do want to pay it off. Okay. And luckily, we have this velocity banking calculator right here. And all I had to do is just plug and play. Now, some of you have been asking, like, how do I get this calculator? Well, I sell these educational packages from Renatus. And then if you purchase the essentials, you get it. But every time I say that, nobody takes up my offer except for like two people, right? Because supposedly people have the money to pay off their mortgage, but not for a little old $2,000 educational package, which makes me think that I don't think you're um I don't think you're as rich as you think you are if you react that way. And I don't mean to like insult you, you know what I'm saying? I'm just saying, I heard this saying a long time ago, okay? The way that you know you're rich is if you walk into a store and you buy a lot of stuff and then you don't remember how much it costs, okay? That's what happens to me nowadays. So if $2,000, and again, this is not to insult anybody, right? Because I know exactly what you're thinking because I was there, right? I was just like when I was poor and I heard the term banks don't lend money to people who need it. I thought that person was a giant idiot, and then now look at me years later with over $731,000. So I'm saying things that won't make sense to you at a certain level, but you'll realize it once you get there. Okay. So my point is this: people who pay attention, and the more that people who pay me, they pay more attention. I think that's how it works. Anyways, full disclosure, I actually resell these educational packages and then I get a commission off of them. So if you're interested in not only learning about velocity banking, but learning about other stuff too, short-term rentals, buy and hold, fix and flip. Actually, let me go here. Like this Airbnb that I'm making. I'm making Z money, right? What am I even talking about? All right, so stuff like that. Click the Google form link below. Anyways, so let's go back here. I typed into details 3.3 years. Sweet. All right, so let's go ahead and put in the time frame, which is now 0, or this payment's now 0. So 55 divided by 12 plus 3.3. And then it's going to be 7.88 years, and then we're debt free. Okay. Debt free, 7.88 years. So we're now to the end of the video. I'm getting a little bit sleepy. It's only 9:02 right now, but I'm really sleepy. I don't know what's up. Probably because I wake up early nowadays. Some days it's like I wake up like 10 a.m. and then like I wake up really late. Or actually 10 a.m. is kind of late for me. But some days my body just wakes up like 5 and 6. And I'm like, what's going on? There used to be days where like I'd freak out because my body would like wake up at like 4 a.m. at 3 to 4 a.m. at like random times. And I'm like, what's going on? Like, why am I randomly waking up? But I don't know what's going on. I'm just saying I'm sleepy now. So time for me to go sleep. But if you made it to the end of this video and you're waiting for the secret code, okay, I'm going to tell you the secret code. If you want to let me know, type this in the comment box below, in the YouTube comment box below, to let me know you watched the end of this video. I am the top point, not the 1%, 0.1%. Okay, just type in the comment box below. I am the top 0.1%. If you want to let me know you watched the end of this video, that's the secret code for today, folks. This is Korean Atlanta Mentorship. I'll see you on the next video. Muchas gracias.